Keith, if I had told you, all right, well, don't worry about the silver price today. We're going to have 5% inflation. You probably would have thought, well, that would be enough to free the price yet. We see it getting hammered pretty thoroughly. So I'm curious, what would you say to folks who are watching this today? And what are you seeing out there?
Well, I think even more interesting is the 10-year bond at 1.35ish. It's been dropping since it hit about 1.9 for the last little while. So we now have negative interest rates of somewhere in the neighborhood of 4%.
Well, hello there, my friends. Chris Marcus here with you for Arcadia Economics, and quite excited to have, I know this might embarrass him a little bit, but one of the legends and the leaders of today's silver industry. Certainly has been the case for me when I was a somewhat confused option trader back in 2010 and 11, was getting into silver. Heard talk back then about how inflation was transitory and how it was going to be tapered off. Now the balance sheet has skyrocketed. Well, the silver price is a bit lower. And to make sense out of all of this, I'm quite honored to have Keith Neumeyer of First Majestic Silver joining me on the show today. So Keith, it's great to see you again. People are always happy to hear from you. And how is everything going with you today?
Well, Chris, it's great to once again chat with you. It's been a while. A lot of red on the screens today, which is, I'm sure, aggravating a lot of your audience, and including you and myself.
Well, I'm glad you raised that, because we'll pull up the silver price today, which is a little bit lower than the other day. I mean, it was up at 26.40 going into Friday and has just been getting pummeled, which seems a little odd to me, because here we have inflation prints, 5%. We had 5.4%. The month before it was 5%. It was 4 point something percent the month before that, which I would suggest that anytime in the 80s, 90s, or 2000s, if you had said, hey, we might have 5% inflation, over double the Fed's 2% mandate. Keith, if I had told you, all right, well, don't worry about the silver price today. We're going to have 5% inflation. You probably would have thought, well, that would be enough to free the price yet. We see it getting hammered pretty thoroughly. So I'm curious, what would you say to folks who are watching this today? And what are you seeing out there?
Well, I think even more interesting is the 10-year bond at 1.35ish. It's been dropping since it hit about 1.9 for the last little while. So we now have negative interest rates of somewhere in the neighborhood of 4%, which you have to go back to the 70s. That's highly inflational. So this whole discussion that's going on in the marketplace is creating some confusion. Of course, the Fed's trying to talk down inflation, and but it's there and it's real, and everyone's feeling it. And with no interest rates to earn, with your income, that money's got to go into hard assets, and it's just not simply showing up in the gold and silver prices, but it will.
Yeah, and Keith, what number did you suggest for that 10-year yield?
I think it's 1.35 today, last I looked.
No, Keith. I mean, in today's U.S. safe haven treasury and environment, we are down to 1.19%. Massive rally in the treasuries.
Look at that. Yeah, I didn't even look at this. I didn't realize it was down so much today. That's pretty amazing. And that should be a $50 plus gold day. And
Keith, maybe one last thing to tack on to this, and maybe we can make some sense out of it. But we hear a lot about CPI, which is the consumer price index. Now, there's also this thing called PPI, which is the producer price index. And at least the way I understood it, all right, here are the producer costs. So maybe could be a leading indicator of CPI. I don't know, maybe some agree or disagree. But if we look in either case at PPI, wholesale prices rose 7.3% in June from a year ago, after a 6.6% print in May. Throughout all of this, where I think the Fed has, I know I kept hearing 40% of the dollars in existence were printed in the last year. That was a couple months ago. They're talking about a $3.5 trillion stimulus package. Do you think this inflation is transitory?
No, I do not. And, of course, nothing goes straight up. But we have, serious supply chain issues. We have, demand coming in because of the restart, and there's just no supply. So, when supply starts to come, I gather maybe at some point there, we might see softening, but I don't think that's going to be happening anytime soon. I think it's going to take at least 2 or 3 years to really correct. But at the same time, it's really going to come down to what happens in the interest rates environment, because that's really what affects the miners and the precious metals is these low interest rates and this negative yield that we're getting. And as long as that negative yield is there, and I think it's there for probably a decade or even longer, because maybe it's there forever. Maybe we'll never see higher interest rates or normalization of interest rates. Because how does the governments, the federal banks of the world, how do they raise rates? They just simply can't. They just bankrupt the entire system. So they have to keep the rates down. And even if you had flat 5% interest rates for the next 20 years, you don't need it to jump to 10 or whatever the case may be. It's that negative interest rate that is debasing the currency, and it's flooding the markets with extra cash, which are going into real estate, going into, of course, gold and silver and other hard assets.
I think that's pretty well said, because we heard for years when the Fed back in 2017, 2018, hey, we're going to taper, we're going to raise interest rates, which sounds great because, all right, if you're getting a yield on cash, why buy gold or silver? I don't know if that's really a logical assertion, but that's what they throw out there. But now you have 1.2% 10-year, 5, 6, 7% inflation. These are with the government numbers. And I mean, to me, it just seems like there's a break point coming one way or another, because like you pointed out, you can try and raise interest rates, but go back, look at the end of 2018. We saw what happened there. So would you say it's reasonable? I mean, I see this as a classic conditional probability where you could say, all right, if the Fed can get out of this corner somehow without melting down the whole system, then fine, there's a different set of outcomes. But if that seems impossible to people, I can't tell each person whether that's the case, but to me, we've seen governments do this for thousands of years. I feel like I know where this is headed. So if that's the case, and there's really no logical way this bankrupt entity can unbankrupt itself, then the fact that silver is lower today, I mean, the way I see it, a reset has to occur, whether it's tomorrow or 10 or 20 years from now. I'd say closer to tomorrow, but is that maybe like a simple way of a starting point where you before thinking about silver, thinking, is there any chance that they can undo all of the money printing and all of the debt? Because if there's not, then that kind of gives you your answer. Is that, what do you think about that?
I think inflation is their only solution. They have to inflate away the debt. They have to debase the currency. And that way it's cheaper for them to pay the debt off. And that's what they did after World War II. And, we're back at those debt levels once again. I think they want to see the inflation. Of course, it's happened very quickly. And maybe they're trying to, taper a little bit so it doesn't just get too out of control. I remember in the 80s, when we saw rampant inflation, and that of course did create some challenges, but nevertheless, I just don't see a solution to the issue. And currency, the banks around the world are going to continually print money, and they're handing out free cash to everyone, and as long as all the stimulus is there, and look at the bank balances. There's more money in the banking system than there ever has been in history. And all that money is just flowing into stocks. And, of course, we're having a 1,000, point correction today on the Dow, but it's a one correction in 12 months. So, we had to see a correction. And of course, that takes everything down with it, including oil. Like, look at oil over the last couple of days, look at copper over the last, couple of weeks, lumber and, corn and, so on. So, we're definitely having a retracement of some of those gains. But once the bottom is in, and could take the rest of the summer, who knows? I don't have a crystal ball. But once the bottom is in, and the big money out there realizes, okay, copper's now hit a bottom, corn's at a bottom, silver's at a bottom, whatever prices that may be, then boom, all this money is just going to come flowing back into this whole sector, and the whole thing's going to get reflated again.
I think that's exactly what's actually going to happen. And I know there's a lot of talk out there, especially around the Basel III, when people thought, all right, it's finally here, we're going to get the repricing. I don't know if that was supposed to be a one-day flip the switch, but in either case, you're talking about how the prices of things are going up and how it seems like the money system isn't adding up anymore. Does this seem similar to what happened at the end of the London gold pool? You had rising inflation of the currency to pay for the Vietnam War and the social programs at home. Then you have LBJ take silver out of the coins. A couple of years later, Nixon says, we're taking the dollar off the gold standard. And actually in those WikiLeaks cables, before setting up the COMEX, there was specific dialogue saying, all right, well, if we have a ton of futures contracts, we can destroy the interest in gold and silver. But even into that, look at how much silver and gold have risen since then. It just reminds me a lot of what's happening today and what almost is going to happen. Do you get that feeling as well?
Well, but you could argue that gold price hasn't changed since the 70s, right? It's
still 1 ounce of gold.
The currency has changed.
Yes.
The currency has dropped in value. Therefore, an ounce of gold still buys the same amount today. It's still, you could buy a nice suit, for an ounce of gold as you did back then. So your ounce of gold has held its value. It's everything else that has lost its value. And I think that's why you have to have gold and silver in your portfolio, because that's going to continue. That's never going to go backwards.
I think so. And okay, well, silver might still be below its 1980 or 2011 highs. If you bought gold back in 1971 or in 2000, you've beaten the stock market, which is worth pointing out. But let's get back to silver here. Keith, I'm excited to get your answer on this one. I think it's going to be educational and interesting.
And silver, by the way, is the only metal that hasn't reached or surpassed its all-time high in nominal terms, which is puts it in a very unique camp. It's the only commodity, I believe, not just the only metal.
Well, one note, platinum has not passed its 2008 high, which it achieved coincidentally 2 weeks before the JP Morgan Bear Stearns deal, which Bart Chilton talked about how rigged that was. And of course, in the JP Morgan confessions, we heard that they front ran their customers in platinum and palladium too. Quite a run for palladium, by the way, lately. Although let's stay on silver here, because Keith, I'm looking at the Silver Institute numbers, which may not be to the decimal point, but I have a theory here that you could perhaps comment on. At least according to the known numbers, we're getting about 1 billion ounces of supply per year. Sound good?
Yeah, well, based on these numbers, and I agree with what the numbers say. I don't necessarily agree with the numbers in the outset, but I can read.
I agree with you there, but we'll take them on the surface for now. Here we have total demand, but if you net out net physical demand, you see, all right, industry here was 800 million. This about 700 million. It looks like these numbers showing anywhere from 600 to 800 million. With the point being that, 2012 to 2018, 2019, yeah, I think the silver price was suppressed artificially then. But if you have 1 billion ounces and only, you have 700, let's call it, of industrial, if investment demand is less than 300, you can keep that going for a long time, which I think was part of the effort to kill any demand, because who wants to sit there owning silver while everyone else is making a fortune in Tesla? But all of a sudden you have a problem, because here we see last year 250 million ounce deficit. Now they say it's only going to be 126 million ounce deficit this year, although that shows a lot less ETF demand, which is a little hard for me to see happening overall. But I wonder, is that the difference where, people say, we've heard silver is manipulated, what's ever going to change it? I would suggest if these numbers are anywhere close to accurate and now we're having deficits, that would seem to me to be the single biggest reason that this is now really on borrowed time, because the bullion dealers say when you have days like this, that their phones are ringing off the hook because people understand it's a rigged market. Now, when they see this in the face of a 5% inflation print, they know it's because the banks are cheating. And a lot of people are willing to say, fine, I'll buy the silver now. So I wonder, do you think that's going to be a significant factor? And if the numbers keep up like this, that's what really could lead to an end of the rigging?
I do, but I quite honestly don't buy that number at all. And to begin with, the net physical investment demand, I can tell you, First Majestic's never received a phone call from Metals Focus asking us how much silver we sell to in the form of physical investments. And our sales have gone up probably 10 times over the last 18 months, 12 to 18 months. And I talked to a number of the refineries, and I can tell you they don't get phone calls from Metals Focus or any of the other two, or there's three total: CPM, Metals Focus, and GFMS, or the three data collection services. And these numbers are all made up, quite frankly. And that investment number is probably much higher than that.
So I guess do you think that we have been in a deficit for at least last year or so?
I think in the last 30 years.
And B, would you say that based on everything you're seeing, the deficit is going to be bigger this year than any of those past couple of years?
I do. Mine supply likely will be a little bit higher than last year because the mining sector was, of course, shut down for a period of a few months, and a couple of the countries, Argentina, Peru specifically, were shut down for quite a long time. I think about 6 months from memory. Mexico was shut down for almost 2 months. These are big silver producers. But and they're all back online. But even if we got below 800 million ounces of production from the miners in 2020, even if we get up to, call it 850 million, which I think that's probably too big of a number. It's most likely going to be 830 to, because that's kind of, if you look back over the last few years, it's kind of the average over the last several years. But mine supply has been dropping. If you go back and look at that chart, you'll see that 2015 is when peak production hit, and production from the miners have been dropping ever since. So, but demand, I think, is far out. Here's the numbers there. So you see the 2016 number. That's your peak, and every year it's been going down, as I said. So, I don't see that turning around. There, silver mines are just really rare animals. I've been in the silver sector for almost 19 years now, and we just ended up buying a gold mine recently in Nevada because finding a good silver mine that's got any kind of real mine life to it is almost impossible, and they're just simply not around. And with the demand from the commercial component, 70% of silver that's consumed is going into industry, and a lot of these components, like solar panels, like electric cars. No one talks about silver in electric cars. I think I'm the only one out there. Every time I hear an analyst, I listened to an analyst last week and talking about copper demand coming because of the electric car sector. I'm going like, okay, we know that, but what about silver, right? No one actually has turned the switch and says, Jesus, you can't produce an electric car without silver, and they're just not getting it. And there's one, and I've said this before, but there's 1.4 billion cars sitting on the surface of the earth right now, and every country on the planet wants to replace them with electric cars over the next 10, 20, 30 years. Right now, we're producing about 4.5 million electric cars a year. Of course, that's going to increase, with Toyota and Audi and everyone, all the big auto manufacturers coming into the marketplace. So that number is going to start to climb. But where's the metal supply going to come? So how are you going to replace north of a billion cars in a market that you're only producing 5 million a year? That's going to take a lot of time. That's not going to happen in 10 years. That's going to, and also the miners don't produce enough copper or silver to even accomplish that objective. So I've said dozens of times, and people listen to me speak, and I'll repeat myself. I feel like sometimes I'm a broken record, but in order to incentivize the mining sector to produce the amount of metals that New Green Deal needs and other government initiatives need, we need $8 to $10 copper, and we need, $100 silver.
Well, Keith, I don't think that's I think that's okay if you're sounding like a broken record, because it's the same way that people sounded in 2005, 2006 when we're talking about a housing bubble. Hey, when the mania is going, some people don't want to hear it, but I think for the people that understand this, really it's having the reassurance from people who are seeing it close hand, like you, is really valuable. So I appreciate you mentioning these things, and I think are worth repeating. Keith, in there you mentioned Jarrett Canyon, and you also had some production numbers out last week, which we covered a bit on the show, but it'd be great to hear any thoughts that you have on another good quarter there.
Yeah, thanks, Chris. Yeah, it was a record quarter for us, and it was really to do with Jarrett Canyon. Jarrett Canyon is a gold mine. It doesn't produce silver, but it's a great gold mine. It's our first foray outside of Mexico into Nevada, which we think is one of the best jurisdictions on the planet to be active in. And we're excited about growing Jarrett Canyon over the next 2 to 3 years. We think it can likely double in size with the proper investment in areas like, for example, exploration and development. But we're still investing a lot of money in Mexico. Don't get me wrong. The Santa Elena mine with the Ermitaño project, which is only 4 kilometers away from the mill at Santa Elena, is now under serious development, and it has been for the last couple of years. It's going to start supplying ore to the mill in Q1 of 2022. So we're going to see some really nice growth at Santa Elena as well. So, the focus is really building and expanding Jarrett Canyon, and also doing the same at Santa Elena.
Well, I know that's been exciting to see you guys are incorporating that, and had a few reader questions before we wrap up today, and perhaps you could give a couple quick comments. One that I know we always get, and you've answered before, there may not be quite anything new, but any quick comment on the Mexican tax situation? And if you need me to go talk to anyone, I'll go with my shovel, say I'll vouch for you. And but any updates on that, or where's that stand now?
It's really an unfortunate situation, quite frankly. But you've got some people that have dug in their heels on both sides of the argument, and we were forced to go to arbitration. The NAFTA panel is in the process of being formed, and it'll be probably another few months before it is, and it could actually take several years of discussions at that panel level to come out with a resolution. So unfortunately, we're spending money on legal bills, which is a terrible thing. I just can't stand spending money on things that I think are a bit of a waste of time. But I'd rather be putting that money into the ground and building the business. But we have to do this for the shareholders of the company. It's our job to protect them, and that's exactly what we're doing.
Yeah, well, on the positive side, I know Hugo Salinas Price is down here in Mexico. I've not met him yet, although seeing if I can get in touch. Maybe we could invite him, who's talked about silver as money here, and maybe the government of Mexico will let him come on over to Silverfest. Maybe we could explain how the economic impact, if they back their currency with silver, which I would think could almost overnight turn it into one of the wealthiest countries ever. And of course, since governments and presidents usually don't know how to get the silver out of the ground, maybe they could say like, oh, there's me amigo Keith. We'll be nice to him and let things get settled. But anyway, I appreciate that update. A couple last ones.
Any assistance you can give us, Chris, would be very appreciated.
Well, I certainly would love to help with that. In fact, one of the other questions, and maybe we'll talk more offline about that, but another question that I've already been moving forward. A lot of people ask, is it possible, now that we've heard that in the US, the CFTC, along with the banks that get fined for rigging the market. Keith, I don't know if you actually saw, but this CFTC policy where the acting commissioner, Ralston Benham, talked about how there are procedures in place to tamp down the price before the whole currency system gets blown out because they've been rigging it.
Yeah.
This was actually, this policy actually gets voted on by JP Morgan and Goldman Sachs. Were you aware of that?
I didn't realize it was voted on, but it doesn't surprise me. I did see the interview, and I did hear, I watched what he said, and it was quite shocking.
So Keith, I've assimilated quite a legal file, and we're talking with lawyers and finding out the options. Maybe there's a degree to which you can answer this, but any comment on, people are asking, the mining companies that are getting clobbered at the lower price, is there any interest in taking legal action? I know you can't speak for anyone else, but if that becomes a possibility, I know your thoughts on lawyers, but hopefully getting some sort of justice, because I think companies like yours have been stolen from, and it's unfortunate, but that's one thing we're working on here. And if you have any thoughts on that.
Yeah, we've volunteered to be part of, I think 3 class action suits over the last decade. We've been approached by law firms in the U.S. who have, tried to get these class action lawsuits launched, but getting a class action lawsuit launched is very difficult. You have to, have a case, and you got to go in front of a judge, and to get a legal case against, the banking system from a class action perspective, it's never happened to date yet. None of these firms that have tried to launch a class action suit have been successful. But we've said on record, I'll repeat myself now, that yes, if there's a class action suit that is actually approved, we would be happy to help and join such a case. But we can't start it. It's not our job. It's we're a mining company, and I feel like sometimes I'm the lone wolf out there, screaming, bloody murder about what's going on the markets, because it is a shame. Bank after bank is fined, and I remember, a decade ago, I was at a conference, I think it was in London, and the World Gold Council members were on stage, and then the commentator asked the members that were on stage, "Is there gold manipulation?" And every one of them said no. And so the sector itself doesn't believe it. There's a few people like myself who believe that there is some games that are played, but I tend to be a little bit on my own, and I do run a relatively large company, and that has to be my focus, to get the metal out of the ground and pay our employees. And if we can get some extra margin from getting some of this collusion or manipulation, whatever you like to call it, out of the system, I'm there to support as best as I can.
Well, that's pretty awesome news. Although, Keith, if I may be so bold as to correct one thing you said there, you said lone wolf, not the case anymore, because I am howling behind you along with my pack of Arcadians. Now there's guys like Rob Keens, the Gold Silver Pros, and others. That I think one of the things that has been going well is that there's a lot of people in our audiences that have legal backgrounds, different backgrounds, are able to make phone calls, they write in, and we are organizing that. Personally, I think there's a case to be made. I think, Keith, I'm going to try and see what I can do here, but I think you could own Goldman Sachs if we can get an honest jury, because between what Bart Chilton said and now what the current commissioner, where they admitted price fixing, which is a bizarre thing for a CFTC commissioner to do. Mm-hmm. Then we have all the evidence from February 1st, 2nd, and the Jeff Curry of Goldman Sachs comments. And I will say this is unofficial, but my intuition leads me to believe these Melvin Capital guys were influencing what happened on February 2nd. I see a big put position in First Majestic show up in different places. So I think there's plenty of evidence there, and we'll be moving that forward. So, yeah, I would be happy to help with that in any way I can. One more.
But the bottom line, the solution is, I think, just to keep buying physical metal. Yeah. Because eventually, because the paper market is what's driving price, and that's clear. I can't imagine anyone arguing against that, but it's not based on supply demand fundamentals by any stretch of the imagination. So, if we could take more metal off the shelves, and then put it away, I think that's really the only thing we could do.
Well, unfortunately, I think that's happening because, when all this happened back in January and February, you didn't have Wall Street silver. And now in a couple of months, it's like 120,000 people, and it's like a contest to take a picture like, oh, I bought 100 ounces today. Oh, yeah, well, I bought 1,000. And now there's more people than ever who are understanding and seeing the things that you've been a leader talking about for years. And Keith, along those lines,
I love those photos that are showing up on Reddit and Twitter of all these SOAR guys stacking metal. It's pretty exciting.
That's why for months I've been saying I think the banks went all in on a bluff early February, hoping they would crush everybody. But when we're in a deficit, and now every time you hammer the price, people buy more. And we saw what happened when the price went over $30 for a couple of hours. The bullion dealers got blown out of their hedge supply. So I am puzzled to understand how that dynamic turns around at this point, and we'll see. Although one last one for you, Keith. A lot of people wonder, and I know you've withheld production at times. We've talked about this a little more. Obviously, worth pointing out that 70% of the silver comes from the byproduct miners, although as I mentioned to you offline, we're beginning to contact those companies and let them know that they're being stolen from by the banks. But any comments, withholding production, selling straight to users, anything you can share there?
Yeah, selling straight to users, I'm not sure if there's a real benefit in it because we would be selling at spot anyways. It's not like we're going to sign a 12-month contract with Sony to, sell, our silver to them for 25 bucks an ounce. Like, there's just no way we're going to do that. I'll take the market risk, and I'm a bull, and I think silver prices are going a lot higher. So why wouldn't I try to get the best price for our shareholders? When it comes to holding back, mining is a very expensive business and it's very cash intensive, and we are generating positive cash flow. And if I see major price swings, and maybe now we're getting into a period where we have seen silver drop by $5 over the last few months. So maybe it makes some sense to start holding back some metal again. But we've done it a few times, and I'm not shy of doing it again. Now that we're producing more gold, that actually puts us in even a stronger position, to be able to hold back some silver because we're not so reliant, on the revenue coming from the sale of silver.
Well, I think that's great that you're in that position. And again, I won't name any names, but when I talk to the other silver companies, ask them that same question. I've never heard anybody say we're worried about our bank financing being pulled or anything like that, which I'm not saying doesn't exist, but just, I think it's more, there's a lot of people out there. Usually the answer I get is, well, I've heard that's the case, but what do I do? And again, I appreciate you spoken up about this long enough, and now there's other people that are able to help support you by letting people know what they can do. So appreciate.
Well, don't forget, people that own publicly traded companies, they want to see, healthy quarterly reports.
Yeah.
So if we hold back 1 million ounces of silver, which we've done, we've actually held back more than that. But that's revenue that's not going to show up, and that's profit that's not going to show up. So when you do your comparisons, Q over Q, from the comparing the year before, your numbers are potentially going to look lower, and then the street goes, what's going on there? And then your stock gets sold off, and then because most people don't know that you've pushed some revenue into the next couple of quarters because they don't read the details, and then they don't know the effects. So there is that issue that we have to be very well aware of. So when we do things like that, we have to be very clear that this is going to be the effect, so that we don't get it on the chin due to the lack of revenue due to the holdback.
Well, that makes a lot of sense. And Keith, before we wrap up, any comments on the First Majestic store, what you've been seeing there? And I heard you said you had a 10-ounce medallion in stock for me that I can give to a loyal First Majestic and Arcadian fan in our audience today. Anything on the First Majestic store?
Well, we're getting products in very slowly. There's a lot of strains in the refining industry, the minting industry, and it's just really, really tough getting products. The retail buyer is the last on the list. The big banks, the HSBCs, the JP Morgans, they're supplying most of the silver to industry, the automotive sector, the electronics sector, and it's really the scraps of the industry that really gets down to the retail sector. So, we're lucky to be able to have some available inventory on our website, and I think we only have 2 or 3 products in stock right now, because when we get them, they just sell out so quickly. But we're always replenishing our inventory, and there it is right there. That's what you're going to be auctioning this off, I believe, Chris?
No, they're not going to be an auction. This is going to be, I'm going to buy one of these. Now, Keith, you remember that I actually won this one at Vrick about a year and a half ago, which was quite awesome, I might add. And that traveled down to Mexico. It's in my current Airbnb with me. Always loved that. But no, I'm going to buy one, and we're going to have a link in the description field below where you can click and enter, because someone is going to win this. And I think it's a beautiful coin, and I love mine. And hopefully you can set one aside so I can buy that and give it away to a lucky winner today.
Sure, absolutely, we'll do that.
Well, I appreciate that. And any final thoughts or any other notes on First Majestic or otherwise before we wrap up today?
No, I think, I think for those invested in the sector, have to be aware that, seasonality does affect the sector. If you go back, I tweeted out, actually the company tweeted out a chart, and a 30-year chart on silver, and June and July, June particularly, but July as well, tend to be pretty weak months for the entire sector. So it's not that surprising to see the stocks selling off and the metal selling off. August tends to be a much better month, and right into December. So I think look for a strong fourth quarter. At least that's what I'm looking for.
Yeah, or I mean, maybe it'll be the fourth quarter, maybe it'll be the third quarter, but at least what I do is I just look and see, is there any possible way these guys ever stop printing money? And until I figure that out, I mean, I understand some people want the price to be higher, but I don't know, I'm going option shopping in a little bit. So, which I'm not saying flippantly, but I don't know how you can invest in silver without looking at it like that. Maybe I'll give it to maybe I'll be spending it in a couple of years. Maybe I'll have kids one day. But it seems to me clear where this is headed. And that's largely thanks to folks like you and maybe that's what being a leader is, saying these things when you see it, when it's not popular, when it's years before other people are willing to buy in. But I hope you don't feel like the lone wolf anymore, because you've really opened a lot of eyes, including mine and the people who watch this show. So I just thank you again for all you've done and stand for, and for being here today to talk silver with us.
Yeah, look, I know I'm not a lone wolf. I said I feel like a lone wolf sometimes, because it's I think I was the first guy to ever coin the phrase triple-digit silver, and it took probably over 5 years for someone to actually repeat that. And now other people say that phrase, and it's nice to see that there are more and more people coming to the story. But when I put First Majestic together back in 2003, well, I looked at the supply-demand fundamentals for silver. I was shocked with how tight of a market it was back then. And this is before electric cars. This is really before solar panels took off. There was a lot more silver on the surface back then as well, because it was only 20 years of consumption through electronics. We now are 20 years in the future from that point, where above ground supplies are almost they're at record lows, and production's dropping and demand is increasing. So we've got the fundamental supply demand story for silver today compared to when I put the company together is dramatically improved. We haven't seen it show up on price yet, but I'm off to, well, I shouldn't say that. We have, when I put the company together, silver is $5 an ounce. So I guess we can't complain too much about $25 an ounce, even though I do complain.
Well, I understand that, and I know you've mentioned before when you say, even suggest the number $1,000 silver, that people start falling out of their chairs, which I get in today's conditioned environment could happen. Yet, even if silver did go to $1,000, Keith, that would be a 40x return. And at least if you compare it to Bitcoin, which was $100 in 2013, and I think it was like 32,000, something like that now. That's a 320 bagger in the last 8 years, while we're now in what I would consider an official global hyperinflation campaign. So I'll leave folks at home to calculate today's silver price times 320, see what that gets up to. And, I guess things will happen when they'll happen. And I'm excited to be on your side of the trade, Keith. So thanks again for joining us here today. And we'll look forward to catching up with you again soon.
That's great, Chris. And think of silver as a strategic metal. Right? Another phrase that I coined, I don't know how long ago, but because I do look at it as very strategic. If we expect to do what we need to do as a human race to improve our lives, improve the planet, we need silver. without silver, we just couldn't accomplish all the things we want to accomplish. So, you just need to have it and in your possession, and look to invest in it as well. But I look at it quite differently than pretty well anything else, because I do think it's critical for all the things that we do in our daily lives.
Well, I couldn't agree more. I think there's a lot of people looking at it like that. And I think there's going to be, whenever that day is, quite a lot to celebrate. And I'll look forward to checking in with you then as well, Keith.
Great. Thanks, Chris. Appreciate your time.